Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Nikunj Dalmia as well as Aisha Faredi. And the good news is that the market is back close to the highest point of the trading session. Yes, it's just above the 17,700 mark, but not a big let-off. In fact, remember IMD announced that it's going to be a year of normal monsoon, and that seems to have supported the sentiment as well, because from there we have seen a bit of reversal of sorts as far as the intraday movement is concerned. Bank Nifty is the key outperformer today, so a gain of almost 500 points coming in on that index, and that's been purely led by the kind of move that we have seen on Kotak Mahindra Bank, which is up 5%, and then some of the PSU banking names are also doing quite well. So Bank of Baroda, Punjab Sind Bank, Union Bank, these are the stocks which are doing well, and consequently the PSU banking index is one of the top sectoral gainers. On the losing side, it's IT. In fact, the IT sector index is down 2% from the highest point of the trading session, and TCS is one of your top losers at the index level. It's going weak into its numbers. It will be out with its Q4 earnings later tomorrow post markets, but nonetheless there is a bit of weakness of sorts that's visible on TCS. But apart from that, Aisha, not major cues really to draw attention to, because it's very mixed across the globe as well. Whether you look at the European markets or the US markets, not much cues.
Yeah, not much cues. I'm just looking, in fact, at the global screen right now. Actually, it's not bad for Europe. About a 0.5% uptick is something that is actually sort of convincing and, lets our market do what it wants to do. The futures right now, the US futures that is, they're absolutely quiet. The perk up, of course, is in the oil markets. By the way, Brent is now at that $80 per barrel mark already. So quite a bit of escalation there, almost a 1% move is what you're seeing. And yeah, precious metals as well continue their uptick. It's really all about Kotak Bank today, isn't it? That's the one which is the high flyer, with the FII holding now dropping about almost 1.5% to 41.22%. That adjustment factor gives change to 1% from the earlier 0.5%. Novama, in fact, is saying that, they actually may see MSCI weightage increase because there is now further headroom for FPIs to pitch in. So they're saying, in fact, that they could lead to inflows to the tune of about almost $690 million on Kotak Bank. This has really been the star performer all through today. There's also Trident. There has been a month-on-month pickup in the production, which is indicating a positive export outlook. That stock as well holding up a good 6.25%. Kotak has downgraded ABB to reduce from its earlier buy. They're saying the sustaining margin improvement is going to be a little bit difficult. ABB currently slashing down by about 3.25%. But I guess from tomorrow onwards, it's going to be full tilt towards earnings.
Aisha, I'll tell you where I'm. While the market rally is impressive, you're trading with impressive breadth also. The market, in a sense, is twisting and turning when it comes to IT. But the primary factor why markets are moving higher is because of the IMD forecast. That we are in for a good monsoon this year. And it is much better than what earlier, let's say, some private agencies had predicted, and the fear of a early summer is completely getting diluted. But then if markets are excited about a normal monsoon, then why FMCG stocks are not going higher? Then why auto stocks and especially two-wheeler stocks are taking it slightly easy? So for me, that is the missing link. For me, what really the trend is that you got a powerful move in banks and a weak move in IT. Now, the powerful move in bank is largely because of the portfolio allocation change which is coming at the portfolio level. And the weakness in IT, I think, is now there is a universal acknowledgement that IT companies will come out with bad set of numbers. So I'm not surprised with that move at all. So Kunal, what started as a bout of short covering has now translated into a rise. Will this rise become a rally? It's not a rally yet in my books.
Yeah, so I think it's a rally in my books because 800 points on the Nifty is a very good rally.
Short covering, short covering.
So, but the first part was short covering. The second part was not short covering because short covering generally indicates that when the OI drops, you expect the prices to rally up. But then when the OI drops and the prices also corrects, like what we saw in the last couple of days, even though it was an intraday adjustment for the indices, that indicates that the markets were going in very light into this kind of a trend, specifically pre the RBI policy event. Now, post that is where the markets have gained, good momentum for themselves. So look at this way, we managed to break past, two important hurdles on the index: 17,500 first on the Nifty and 17,700 now on the Nifty. So assumingly, if we sustain above the 17,700 mark, we could be looking at a much more, bigger upside for the index over the near term. So would maintain the bullish stance on the indices. 17,500 would now act as a support for the index.
So Naresh, if you are a bull, can I say अच्छे दिन are here and अच्छे दिन are here to stay?
Absolutely the word. So अच्छे दिन are here to stay, and what we are seeing is it should be broadening of the market move. So say the initial move, when we see the first initiation of short covering, that is where the large caps move up really fast. So we saw a faster recovery in Bank Nifty. Then we saw a lot of large caps do well. But as we go ahead, it would be broadening of the moves, wherein I would expect the broader market stocks to do better, the mid caps, small caps, and even beyond the top 20 names. So overall, अच्छे दिन for the overall market, not just the few heavyweights.
Okay. Nitin Raja, what is your sense? Do you think worst of the print for this calendar year is behind us? Whatever could go wrong has gone wrong and we've emerged on the right side of the trade?
No, I wouldn't say that, Nikunj. I think, it's yet early days into the rally. Of course, we know markets always work contrary to most people's expectations. And, as we were coming close to end of March, we were in such a negative mode, and, the markets had gone, a couple of times and around the 16,000 and just below. So in that sense, it's been a good rally that we've seen in the markets. And, generally the earnings seasons normally start off in a positive mode. You normally get to see, most companies who are, except you take some of the IT packs, which, generally deliver earnings irrespective of their business. But most companies, when they have good numbers, you will see them come up early with earnings. So I think you are going to see some of that happen. So I think in that sense, the fact that the RBI held rates, has also sort of played into this whole positive sentiment. But I think it's early days to call. I think we are yet trading in a range. You are going to see a reallocation of money in the short term towards fixed income and debt happening. So I think I would not like to call it that, that the worst is over. You might probably get that volatility once again, but very difficult to call. But I would believe that we are yet going to trade in this range for some time.
Naresh, wanted your take regarding a couple of these large caps which are sitting at all-time high levels or very close to that. ITC is almost at that 400 rupee mark, so a 2.5% gain today, and sitting at an all-time high level, and even L&T just around the 2300 mark, close to the all-time high levels as well. Your take as to where they are headed? Time now to profit book or continue building on?
So ITC is something which is getting closer to a point where the risk rewards are not that great. So if you look at the current breakout, it's a range breakout of say 370 to 392 zone. So roughly a 20-25 point range. That would give us a target price of 410 to 415. And then again a pause. So out here, the case is one should be using a trailing stop loss methodology rather than booking right away. But a fresh trade has a very small trade out here, wherein the target would be 410. So it's no more the best place to be, but L&T is the one which is starting off a longer term uptrend. When I say longer term uptrend, the stock made a top around 2015 to 2022 start. That was a breakout 3-4 months back. After that, we consolidated between 2050 to 2250, and a fresh breakout has taken place into a new all-time high. So out here at current levels of 2300 to 2250 is a buy zone. I would have a target price of 2500 to 2600 in the short term, could be higher also in the medium term. So with a medium term perspective as well as short term, L&T looks a good investment bet as well as a trading bet, and the whole capital goods sector has done well. L&T has a lot to catch up.
Okay, that's L&T in trade. Managed to hit a 52-week high just yesterday, and Kotak Bank is the one which is winning all the way today. In fact, let's take it across to Samit and find out why exactly is Kotak buzzing in trade today.
Well, if you see the March 2023 shareholding pattern that has been declared by Kotak Mahindra Bank, what we are understanding is that the foreign holding in the bank, that is the FI holding in the bank, has declined by around 1.47 percentage points to close to 41.22%. Now, this could result into headroom for the FI holding increasing to around 25.05% versus the earlier limit of around 22.38%. Now, as per the MSCI rule, if the foreign headroom is less than 25% but equal to or higher than 15%, then the price adjustment factor stands at around 0.5 times. But given that, and this was the case for Kotak Mahindra Bank so far, but given that the FI headroom for Kotak Mahindra Bank has now just increased above the 25% mark, the price adjustment factor for Kotak Mahindra Bank would now be around 1 time. Now, as per MSCI, as per the shareholding that has been released, there is a high probability that the price adjustment factor could be adjusted for Kotak Mahindra Bank in the May 2023 review, and there is a high probability that the weightage of Kotak Mahindra Bank in the MSCI index could increase. Now, as per Nuvama, the potential increase in weightage could lead to an inflow of close to $690 million US, and the stock has been languishing in trade, and this could be an upside trigger, that is the MSCI inflow could be an upside trigger for Kotak Mahindra Bank. Now, apart from Kotak Mahindra Bank, there are also a host of other stocks that would remain in focus because of the MSCI May 2023 review. Firstly, there is a possibility that ACC might be removed if the stock continues to trade below the 1,730 rupees mark. Hindustan Aeronautics has a high probability of inclusion, whereas Indus Towers has a high probability of exclusion from the MSCI index. And lastly, if you see, Power Finance also remains in focus, because if that stock continues to trade above the 160 rupees mark, then there is a high probability of the stock getting included in the MSCI index.
Bajaj Auto above the 200 DMA. You've got Axis Bank, which is above the 200 DMA. We'll play an excerpt of our interaction with Axis Bank, where interestingly, Amitabh Chaudhary is not talking about growth expansion, he's talking about growth moderation. When I say growth moderation, the credit growth moderation. I mean, other things equal. Axis Bank is in a very formidable space because they've got the insurance business and they have now the city credit card business. So the two ends which were missing links for Axis Bank, let's say a couple of years ago, when it was a universal bank and it only had a securities business and a fee-based income model. Now they've got insurance, and now they also have the city credit card business. Let's hear out Amitabh Chaudhary, and then we'll understand the future of Axis Bank with our experts. Mr. Chaudhary, every time when we've spoken to the management and the promoters of companies, they said, look, we don't look at the stock price. It is a function of market, and market is something which is based on sentiment, valuation, a lot of multiple factors, and we grant it to them. But for bankers, it's important to look at the stock price because that's how you raise capital. Do you look at your stock price every day?
No, I don't. I've learned the hard way. There's no point in looking at the stock price. Yes, obviously when you're growing and you're growing at a pace where you're consuming capital, you do need to raise stock price. In the 3.5 years I've been here, we have raised capital twice, 22,500 crores. That's not a small sum of money. We have just acquired Citi, paid 11,600 crores for it. And if we continue to grow at a certain pace, at some stage in the future, sometime we might have to raise capital. Don't see the need now, but sometime we might have to raise capital. So yes, in that sense, the stock price is important. In that sense, you want to raise it at the right time, at the right price, so that the existing shareholders also benefit. And you also give an opportunity to the new shareholders to make money if you leave some room for the stock price to grow. But no, definitely don't watch it every day.
The two fundamental changes which have happened for Axis Bank in last 5 years is you've taken the insurance business big and you've got the credit card business. Axis Bank 5 years ago was just a commercial bank with a small securities business, but now it's a full service bank. Was this intentional, or this is something which you needed for survival?
No, it was intentional. I mean, the platform was already there. We had all these businesses, we had all the subsidiaries with the licenses. We were slightly late to the party as far as some of the, let's say, the businesses and the subsidiaries are concerned. And one of the elements of our GPS strategy was to scale up the subsidiaries. So when I came in, we were making about 300 crores of profit in the top, the four larger subsidiaries. It will, the number is, if you look at the run rate basis and analyze it, it's closer to 1,500 crores now. So in that sense, I think we've come a long way. We need to continue to scale some of those businesses. And yes, it does allow to bring almost every financial product to a customer, which is also being produced in-house by Axis Bank. So it does help. And And one of the elements of our GPS strategy also was to talk about one axis. So not only it's just about selling a product or a service to a customer, but bringing the entire group to a customer and not only getting a higher share of the wallet, but becoming more relevant to the customer because we can cater to all the needs of a customer.
But then from an investor perspective, how does one choose the best private bank? Because each private bank has a unique USP. Each private bank has a unique, brand recall. But all of them, in a sense, in last 5 years have given equal or similar returns. Whether we look at Kotak or whether we look at HDFC, Axis and ICICI Bank. 5 साल में return almost same hai.
Yeah. So I think, Nikunj, for us, one of the very clear parameters is that we don't look at these banks as lending institutions. For us, it's really a risk management culture. And out there, if you really look at it, I think any bank which has been able to register growth and build, so really 3 parameters: A, maintain growth consistently; B, have a liability franchise which is significantly better than the others in the market; and 3, keep your books clean. So really, if you look at it, these private banks have all been at different stages of journey. In that you have the leader who has almost been very consistent, but had issues with technology and then sorted that out. Then you had the other one who came back with a long hiatus of cleaning up the books and virtually not growing the balance sheet, getting into an aggressive mode, having cleaned up its act. And so I think really speaking, for us, it's been sticking with the top 3 private banks of size as such, and who have been able to grow with that attendant size. And so Nikunj, really in 2018-19 we took a call that we see a consolidation happening in the sector post the IL&FS scam. We saw the big becoming bigger because they were raising liabilities at almost often 150 to 200 basis point discount to their peers, that's the tier 2, and that's why you see these top 2, 3 at close to 52-week high, while the tier 2, tier 3 are nowhere close to the valuations that they used to enjoy even pre-2018. So that's how we've sort of looked at these banks.
Well, the banking names are actually doing quite well today, starting with Kotak Mahindra Bank itself. IT is not. The top 4 laggards from the index are actually from the IT sector, leading with TCS, which is down 1.5%, and Infosys, HCL Tech, Wipro, they're down anywhere between 1 to 2%. We'll do one thing, we'll slip into a very short break. When we come back, we'll put the spotlight on TCS as to what the expectations are from Q4 tomorrow.
Back with closing trades right here in ET now. Let's just revisit what the closing trades are looking like. 17,783 for the futures, 101 point higher. Kotak, Naveen Fluorine, Bajaj Auto, Concor, even a JSW Steel. These are all your big winners in today's trading session. The breadth of the market is not as robust as what the benchmarks are doing, but it is marginally in favor of the advances regardless. There are pressure points like TCS, for instance. That's at the day's lows. It's down 1.6%. Infi is down 1.5%. HCL Technologies, Wipro, TechM, the entire pack is a drag ahead of the numbers coming in from Infi and TCS. There's Berger Paints, MCX, ABB after that Kotak downgrade like we earlier highlighted, UBL and Delta Corp, which are also laggards in the session. In fact, Anisha, you've been working on the IT earnings. What's the expectation from a seasonally muted quarter?
Well, the expectations are muted itself, though having said that, at least TCS is likely to outperform. That's the word coming in. So today the stock might be down about 1.5%, but if you look at the 5-day move, the stock is still trading with a bit of a gain, and that's because, as I pointed out, TCS is likely to outperform. We are working with a revenue growth of around 2% in dollar terms and rupee terms, and the margin is expected to expand by 50 basis points. That is because the utilization of the freshers is going to be better, plus the currency tailwinds are at 10-quarter high, and that will aid the margins as well. Deal wins were also quite steady actually for TCS this time around. So the street is working that the number is going to be at least $8 billion. They have been guiding that on a quarterly basis it will be between $7 to $9 billion. We are expecting that it's going to be towards the higher end of that range as well. Profitability as a result of all of this is expected to jump by 6% sequentially. 11,500 crore thereabouts is what the street is penciling in, with a constant currency growth of around 1%. The key thing to watch out for, of course, will be the management commentary, because this is the first time they'll speak a bit more about FY24 guidance, whether the double-digit growth will continue or not, because the street is already penciling in a growth profile of around 6 to 8% for TCS next year. So is there any improvement in that or not? As well as a word on the margins, when do they want to come back to that 26 to 28% aspirational band as well? Buyback is a possibility as per ICICI Securities, so 20,000 crore is what they are penciling in with respect to the buyback news. But with the transition happening at the top level, the BFSI vertical seeing the challenges across the board, plus headcount, which has been declining at least in the last quarter, these things will remain important as well. But Kunal, I wanted to get a sense from you as far as the IT pack is concerned. Is there a trade at all ahead of earnings, specifically on TCS and Infosys?
So I think at 3,200 levels where TCS tested today on intraday session, I think just about an hour or so back, I think that could be a good zone to go for a contra buy on the stock now. Indicators are coming back into an oversold territory for the stock price. So you may play for a trading pop over here. I think the best way to try and trade TCS would be to look out for this in terms of options. So maybe 3,200 call options for someone who's looking out for at the money strike, and for someone who's looking out for a slight out of the money strike, I think 3,300 call option for the April series would be a good strategy.
Now let's look at this 5-year relative comparison data. You always look at investing on a relative and on an absolute basis. But when you're looking at matured companies, when you're looking at Nifty, when you're looking at big banks, you always look at historical growth numbers and historical averages and compare them future growth numbers. So the P multiple for IT, large cap IT, TCS, Infosys, Wipro, all of them are either at a 5-year low average or they are nearing there. That data point will just come up on your screen. Nitin, now it's easy for me to say that IT stocks have underperformed. They are nearing their averages if I look at the 5-year average, and it is a buy. But do you think that is one part of the story? The other part of the story is growth, which is getting challenged?
So I think, if you really ask me, a lot of that is already in the price, Nikunj. I mean, everybody is talking about growth and everybody is talking about how, there is going to be slowing growth, a recessionary phase in the US, and so on and so forth. And that has seen a very, very strong correction in each of these companies, if you see over the last 1 year, So I think a lot of it is already built into the price. My own view is that if you really look at these businesses, they've been through these cycles and they've been through worse cycles over the last, 25, 30 years, and have shown through these cycles their ability to generate cash, their ability to pay out dividends, their ability to buy back stock. So I personally think that, 6 months down the road, we might be looking at things very differently. And these are good, if you would ask me, value or contra plays in the cycle. IT is here to stay. It's not going anywhere. And, if you're talking of growth having slowed down from the 12-14% to the high single digits, you've already seen a 25 to 30% correction in prices across the board. So, I would think that there is value sitting out here in the sector.
Your take on a couple of these auto names which are actually bouncing back. Bajaj Auto, of course, the announcement came yesterday during market hours regarding their tie-up with Triumph. But the street seemed to be penciling quite a bit on account of that. And Eicher Motors too is quite excited today, 3% higher. Naresh?
So Bajaj Auto has finally given that breakout. So if you were to adjust it for dividends also, the stock has actually come to a new all-time high if you were to adjust it for dividends. Technically, in the short term, 3,900 to 4,000 was a major problem for the last 1 year. And it has clearly taken it out today. We are well above 4,150 levels right now, indicating a fresh start of trend out here. So any dips back to 4,000 to 4,100 zone would still be a place to add. A buy at current levels also would have a target price of 4,500 on the stocks. So looks very interesting. Eicher Motors, on the other hand, has corrected from 3,900 to almost 2,900 levels. So it's a bounce back candidate wherein 3,250 to 3,300 would be a tough ask. So Bajaj Auto looks interesting. The stock has actually given a breakout, taking leadership. Very similar to what happened with TVS Motors a couple of years back when it took leadership. and it continued to do well over the next 1 year. So I would be extremely bullish on Bajaj Auto.
Okay, Nitin, what's your take regarding the hospitality sector? Because we were just discussing with a couple of managements as well at Lemon Tree, Chalet Hotel, and they are saying that the higher rates are likely to continue because A, the demand is so strong, and secondly, for them as well, the costs have gone up. But from a demand point of view, would you still say that these are good businesses to invest in? Because profitability-wise, they have more often than not disappointed.
So look, we're coming back after a very, very long cycle. It's a cycle in which hardly any capacity got created in the industry. And so when you have really seen demand come back, and anecdotally, when we travel around and, at least when we talk, we see A, business travel having gone up tremendously. B, you're seeing, there is this newfound flavor of people wanting to discover India back, and that is sort of manifest, in sort of anecdotal conversations that we have with people. So I think, hotels will probably continue to have a resilience as far as their ARRs are concerned. But, the real question is, from our perspective is, are we seeing peak margins out there? And I would tend to believe that the margins that we are seeing for some of them will be peak, because a lot of them would now start looking at, getting into a capex or expansion mode, even though it might not be the, heavy capex that we have seen in the previous cycle. But, from an earnings perspective, this could be peak margins. And that's my sort of fear for the sector from a valuation perspective.
Okay, Nitin, we let you go on that note. Thanks as always for taking the time out and joining in. Let's get in some closing strategies as well going. Kunal, what's on your list?
So that will again be a buy on Bajaj Auto. I think that's a stock which looks very attractive on the charts. Now from a daily breakout, the stock is now confirming a monthly breakout for itself. So which means that a move which started off for the stock a few weeks back is now resulting into a possible up move for potentially the next many months. So would be bullish on Bajaj Auto from here on as well.
Right, okay. And Naresh, what about your ideas?
So that would be Tata Motors. The stock made a strong move yesterday. And now we are seeing a little bit of fade off. This fade off at 455 is a good entry point for the stock. A big breakout has taken place above 450. Eventually, the stock could go towards 530 mark. And interesting is the fact that the whole auto sector has started picking up. So the sectoral trends are also looking strong. So Tata Motors is the one to accumulate.
Both ideas from the auto stable, be it Bajaj Auto or for that matter Tata Motors as well. But now with the IMD forecasting a normal monsoon this year at 96%, easing worries over crop output. Before that, are we prepared for the sweltering temperatures in the second half of April? M. Ravichandran, who is the Secretary of Ministry of Earth Sciences, says that the temperatures will definitely be higher in the latter half of April.
This whole season will be normal. So normal means basically it is whatever the last 50 years happened, the same thing will happen this year also. So it is, you can say that normal means about 87 centimeter. Roughly about 3 feet of rainfall will happen average over the India. So that same thing has happened this year also.
And what about the El Nino effect? What is your prediction?
I think El Nino, it will be coming, maybe it may be coming, evolving in maybe the second half of the monsoon. But before that, there are other two factors will compensate. That's why it will come normal. That's what we are thinking.
So you are saying that it is going to impact the second half of the monsoon. So what this impact really means?
Actually, basically what will happen is in the Pacific, there will be a warm temperature will happen, the gradient will happen, especially in the Eastern Pacific. So because of that, you will have the wind pattern changes. The monsoon winds, whatever is coming to India, that will be disturbed. Okay. So because of that, it will be the winds, but basically monsoon winds is rain, whatever the evaporation is come from the ocean to land, that will be disturbed. That's why it will be less in that second half.
Slightly lesser than the average that you are saying?
Yes, basically in the second half it will be lesser than the normal of that particular months.
Okay. And if you talk about the positive factors, what are they and how they are going to contribute?
That is basically when we are talking about Pacific Ocean, it is a negative impact. But our own Indian Ocean, there is a dipole, Indian Ocean dipole, type of things. That will be favorable to us. And also the last season, in the winter season, the snow cover in the European, Eurasia.
All right, Pashupati Advani also joins us. Pashupati, good to have you back. Thank you for joining us. How you been?
Fine, thank you, Nikuj. Just returned back from US, where I guess they're not thinking too much of us, but it is what it is.
But looks like you convinced everybody. FIs are back. So your trip has really helped.
That's true. That's true. One good thing I did do, I visited a Range Rover dealership, and literally they had no cars for sale. So that should say a lot. I know Tata Motors had good results yesterday, but basically there were just people there and they were just picking up all the cars that they could find. Whatever deliveries they were getting, they were able to sell. So I guess that says a lot about what's going on in that space.
Keep it simple. Pashupati Advani went to US. He went to a Land Rover showroom. Cars were not available. Who is making these cars? Tata Motors. Shortage hai, stock le lo.
Well, they had good results, Nikuj, yesterday. So I guess that probably has something to do with it.
Naresh, Tata Motors, the star yesterday, but today no follow-up buying.
So that is pretty normal, and that is what is a good time to actually get into the stock. So what we generally see is whenever there is a news-based move, we see a big spike up with volumes. A lot of pricing gets done on that day, and then we see a little bit of a fade off. So this fade off, say yesterday we opened with a say a price of almost 452. Today we are at 458. So this fade off towards that 452, 458 mark is actually an opportunity to accumulate. I would expect it to hold this gap which was made at 440 to 452. And from here on, eventually this breakout has a potential to go towards an all-time high as well. So the risk reward is in favor. I would keep a stop loss below 440 and take a medium-term bet and expect a move towards an all-time high. So good price volume action, a little bit of a pause and a fade off is a good opportunity to buy.
Okay. 458 rupees for Tata Motors. It was the real star yesterday. Where are we in terms of the Nifty positioning? Well, we are not bad. It's not turning out to be like a great or a day of monster gains, but it's not bad considering that we are already up about 700 points on the Nifty, about 1500 points on the Bank Nifty. Pashupati, the fear with most of the IT bulls is that US will contract. It has contracted, will continue to contract, and IT companies will be in for a long winter this time. Do you buy that argument?
No, for sure, because I think what's happening with, let's say, for example, AI in general, and maybe even Chat GPT, which is a big product that I guess Microsoft has its hands on. It's doing a lot of the simple IT stuff itself. So, if we're in the simple IT space, we're obviously going to lose. So definitely I see contraction in business for Indian IT companies. And also there is a move within the US to try and bring jobs back to the US. And therefore, they're trying to get these same IT jobs sourced in the US. It's easier said than done. But I think that that's also putting pressure on the Indian IT stocks. Nikunj?
Hi, this is Anish also joining into the conversation. What about the entire capital goods and industrial space? So Siemens is sitting at a life high level, just around the 3,300 mark. Similar is the case with L&T. But this morning there was also a note coming in from Kotak, wherein they've downgraded ABB, saying that perhaps the best is over and the valuations now don't leave too much room on the upside. Your take on the industrials and capital goods space?
My take on that space is that India is kind of the flavor of the month or the year or whatever you want to call it. There are a lot of people looking positively at India for growth. And where will the growth come? Obviously in this capital goods space, and obviously driven by government spending. There is some reluctance, I think, to investing in PSUs simply because the government keeps changing the rules in terms of not allowing them to make the money that they would normally make. So then what are you left with? It's almost a negative list. You take 100, you take out the PSUs, you're left with maybe 40 companies or 30 companies. So then you buy those. So I actually feel that the capital goods sector is a place to be in, but we are at all-time highs. So then you have to be cautious. So, but I think nibbling is continuing to happen even at these levels.
What's the best stock to play this theme? Are you looking at infrastructure stocks, industrials? Could you name some of the top bets?
Again, I would say that definitely infrastructure stocks, because the money that is being spent driven by government on infrastructure. I haven't seen the superpower going into cement and steel again, which is the real basic infrastructure. But you are seeing things. If you've got a product in India that everybody needs, and it's then becoming price inelastic, those are the companies to find, and those are the companies that are doing well. And we're seeing it. We're seeing these few jewels pop out, and one just has to look harder and see what's happening.
Some of the other stocks as well. Today there was large trade on Sagar Cement, so that stock was up, and there were some large trades on Nykaa, Policy Bazaar, etc. as well. In fact, since we are speaking about the entire new age tech companies, let's listen into the opinion coming in from Samir Arora, because he was quite positive about a couple of names. Paytm and Zomato are the two stocks that he holds. Listen in.
We have two names in these 25 names, which are Paytm and Zomato. Paytm, of course, we have got good timing, so we are up some 20-25%. Zomato, we were up and then it went back, so now we are zero. But both these are big brands, big survivors. And although, like for example, you read recently that Reliance is coming into cosmetics, or trying to compete with Nykaa and stuff like that, nobody is going to announce, new person is going to say that we are going into food delivery or going into even payment business so easily. And therefore these guys are now in a place where previously there may have been 20 guys, and now they are, in the case of food delivery, down to 2, and there is no way a third guy can come in. And in this, one of the two is unlisted, and if they compete too hard and think that by getting a few more market share points here or there, they can have a hope of getting listed, that also does not work unless Zomato does well. So I think that the steady state solution will be that Swiggy will back off, let the Zomato win a little bit in the market, so that some years or months later, maybe 1 year later, it can hope to go public. Otherwise, it can keep fighting without having ability to get listed, because the market will not accept a second name in exactly the same business with nearly exactly the same market share.
Okay, so that's the word coming in from Samir Arora. Pashupati, your take, and would you be a buyer on Zomato?
I also looked at the same, what we call the famous four, which is Paytm, Zomato, Nykaa, and Policy Bazaar. And I'd actually rank them in that order. I think if anything, the change has been that I put Nykaa below Policy Bazaar, simply because of the announcement that Reliance has made that they're going to come into the same cosmetics business. And as you ladies know, the markup on cosmetics is high. So, there's only one way to go when people are competing with price. So it's going to hurt Nykaa for sure. And we're seeing that in the stock price. I do hold Paytm. I think that's a business model that is here to stay. Zomato, I kind of agree with Samir, but I've not yet bought any. I'm looking at it because, again, it went up and now it's come back to the same kind of prices. So it is something that's worth nibbling in. But yes, these are new age businesses that are here to stay. And certainly, two of the four are definitely worth picking at some point. Maybe sooner rather than later.
What are you looking at? Are you looking at a better price point? You're waiting for one more quarter to get understanding of what's happening to the food stroke the grocery business. What is that monitorable?
If you're asking me, I think I'm just looking to see what should I sell to buy some of these stocks. Because I don't think I want to be a net adder into the equity markets at this point in life.
Top 3 holdings. So what are top 3 holdings? We'll get a sense of whether you'll sell or not.
Well, I've got the HDFC twins. I'm waiting to see how that masala goes out. So that's one. That's probably where I'm going to lighten up. I'm just waiting to see when the merger actually takes place and how they both react to each other. Whether it will be a perfect match, in which case it doesn't really matter. So I do see actually some falling off in the HDFC twins, simply because together they become a very large and dominant part of the index, and there will be some funds who will be forced to sell off because of concentration. So I think that's one of the things that's going to put price pressure on those stocks, even though fundamentally there's no issue whatsoever with either of them. So I think that's where my money is going to come from.
Kunal, what's your reading on the charts though for both HDFC Bank? Is it really that killer combo that Pashupati is hoping it would turn out to be?
Well, let's hope they turn out to be, because I think it's been almost 2 years, if I'm not wrong, that these stocks have been very, very sideways. They've been just trading, in a very flat line kind of a trading range for themselves. So I think sooner or later these stocks would eventually get into a breakout mode. Now the point is that last year or so, I think 2021-22, we were at a point where most of the banking rally was focused into two of the names, like ICICI Bank and SBI. I think largely had done exceptionally well, and most of the other stocks had underperformed. Right now we are seeing that the likes of Kotak Bank, for example, has made a good pickup of price action. HDFC Bank has been more robust over the last, I think, 1 or 2 months. So it's the laggards who have started to show signs of recovery. Now what we need to see is whether the larger cap names like ICICI Bank and SBI, whether these stocks they tend to participate or not. But net, my sense is that it's a matter of time that whether HDFC and HDFC Bank, they would start to get into that firing mode on the upside.
Let's also try and bring in our colleague Vamakshi on board to talk about Trident, because that stock is back at the highest point of the trading session. The stock was up on account of the Q4 updates that have come in quite strong on a monthly basis as well, because for bath linen, for instance, it's up around 7% on a month-on-month basis. The paper and chemical divisions too have done well. And then the analysts are talking about the triggers going forward as well, because China plus one theme, which is something which is working out for them. The FTAs are likely to come into the picture. Australia has already happened. UK is something which is in the works, and that too can add quite a bit of momentum on the upside for Trident. As far as the Q4 update is concerned, the home textile division was a bit sluggish in the last quarter, but it seems to be picking up now, because for even the yarn business, we have seen an uptick of 15% on a month-on-month basis. Bed linen is up 13% as well. And even if you look at the chemical segment, which does not contribute that much to the top line, but still has shown a growth of around 12%. So that's about Trident. But on the stocks, Nuresh, what's the sense? Trident, Shoppers Stop, any other names from textile and retail space that you would want to look at?
So Trident has been in a one-way downtrend, so would not trust the current move as such. The best name in the textile space always over the years has been KPR Mills, which has gone through multiple cycles of up move and has not corrected much. So as of now, if you look at it, the stock is very close to a high of the last 6 months, very close to a breakout at 615 odd levels right now. So a short-term breakout doesn't play out here. So that is one. In terms of other textiles, watching out for something like a Gokuldas Exports, which is consolidating for quite some time. But KPR Mills looks the most interesting, which is a fresh breakout today.
Okay, so KPR Mills is a fresh breakout, so that stock sitting high by around 4 to 5%. A lot of other movers as well, to be honest. Shipping Corporation of India, wherein there was the news flow of the privatization happening in the next months. Concor as well, 2.5% gain after a brokerage upgrade coming in. Bank of Baroda, wherein the Q4 update was again quite strong. JSW Steel, wherein the Q4 production numbers were out, a record production output, and on a year-on-year basis, the volume has jumped up by as much as 24%. So very, very broad base, and even the mid-cap IT is now making a bit of move. Let's pull up the stock of Mastech. That suddenly spiked 4%. KPIT Tech, which had a very rough last week on account of that note coming in from JP Morgan, has seemed to recover a tad bit, so 4% higher on that. And then you also have Tata Elxsi, which is trending higher by around 3% today. Pashupati, wanted your take regarding the entire metals and cement pack. Cyclicals, of course, but then a lot of moving parts as well. Would you like to be a buyer in any of these names, cement as well as metals?
Yeah, I think both those sectors are a proxy for infrastructure spending in India, which everybody from overseas and in India believes is going to happen. It's just a question of whether you buy large cap cement or you buy mid cap cement, which appears to be cheaper on a per ton basis. I mean, that's your choice. Of course, there's the overhang of the Adani issue, which has got Ambuja and the Lafarge Holcim issue, which has got the big Indian cement companies. And there is a question as to whether that is going to be any kind of a trade or they're trying to sell some 5-10% of it. So that's an ACC. So I think that it is a sector that one wants to be in. But again, one has to choose whether you want to be in the top end of the sector or you want to be in the next tier, which is the mid cap. And I think there's going to be some consolidation. So I think mid cap is probably the place to be.
A nice little rally in Tata Steel today. Very unusual to see that why metals are going up. One side OPEC has cut production because demand is low. China was supposed to open up and create a lot of inflationary pressure for the world. That has not happened. But Tata Steel today, it's one of those stocks which surprises you with sudden spurts. Kunal, no one saw this move coming.
Yeah, so not too much bullish on Tata Steel, but I think JSW Steel is a much better option. I think that stock has been more consistent, has been a strong outperformer. There have been bouts of phases where the stock has actually been one of the best leaders in terms of the entire metal pack. I think 2021 as well as 22 first couple of months of that year, JSW Steel outperformed most of the other peers in terms of the price uptake, and then even post that correction from I think the Feb of 2022 or March of 2022, JSW Steel did not correct as sharply as compared to the other stocks. Most of the metal names in that phase, I think, corrected by 40% to 50% in a matter of 3-4 months. So when you're looking out for a sector which is high beta, you would probably want to have a stock like JSW Steel, which is relatively moderate beta within the entire pack and also tends to give you more robust as well as strong returns. So I would prefer that stock.
L&T is at a 52-week high. Naresh, what does that mean for the other ancillary stocks? Because if L&T is at a 52-week high, markets would say, is it defense, is it construction, is it capital goods, is it road, is it railways? Because this is like the benchmark, this is like the pivot stock for the infra space.
So clearly it tells you that capital goods is leading, and it is across the world. So if you were to look at a Honeywell Auto globally or a Caterpillar, a lot of them hit new highs over the last few months. Now there is a lot of catch up to do. So the other best performing capital good names is Siemens, which was at 2400 say in July, August, and today it is at 3400. So that's made a 30% move. From that point of time, L&T has moved up only 10-12%. So overall, it's all about the capital goods. And if you look at all related capital good names, whether it's a Bharat Bijli, it has done well. You have smaller transformer companies which have done well. You have a TD Power which has done well. Then you have a construction equipment company like Action Construction hitting new 52-week highs. A Sangvi Mover. So it's all capital goods and capital good related companies which are really doing well. And they've been the best performing stocks over the last 3, 6, 12 months in the mid cap as well as the large cap space. And L&T being the largest one has actually been a relative underperformer. So I expect it to catch up, go towards that 2500, 2600 mark.
Kunal, again the same question L&T. It hit a 52-week high. It's a stock which is ahead of the market in terms of outperformance. It's now making new highs when markets are not at a 52-week high.
Yeah, and I think that's a very strong statement by L&T as well as the overall large cap space, that even devoid of the overall market recovery or strong market trends, where we are not closer to the 52-week high for the indices, be it Nifty Bank Nifty, many of these large cap names are coming back towards the 52-week highs. Now add to that L&T, I think even Bajaj Auto is coming back towards that kind of a price range for itself. I think HDFC Bank as well is coming closer to that 52-week high kind of a price range. So many of these large cap stocks which have been silent performers, I think these stocks are making a comeback. That adds to more robustness for the market trend. So in case if there is any kind of a say mild correction, a 200 point, 300 point downtick on the Nifty, if these large cap stocks sustains and they don't correct that much, then I think there could be a hard chance that we may come back quite strongly. So larger cap stocks all performing is always a good sign that the market trends can sustain.
Okay, and our larger caps, the names that you have for your BTSC picks as well, Kunal?
Yeah, I think few large cap stocks, few stocks which I would be bullish on. First stock which I would be bullish on, of course, is Bajaj Auto. From the pack, looks attractive for a target now at 4,300. Stop loss I have trailed higher to 4,080. And India Mart is apparently a stock which has come back towards a breakout mode, forming a bullish flag pattern on the daily chart. So would suggest a buy 5450 as a target. Stop loss at 4,980.
Right. Naresh, what about your BTST trades?
So first would be a buy on Tata Motors. The stock has drifted a little lower today, and that's an opportunity. Expecting a follow-on move over the next couple of sessions. A stop loss at 450 and a target price of 475. Second is a buy on Torrent Power, which has seen a good move today as well as yesterday saw a big volume tick. Longer term charts are shaping up really well if it can sustain that 560, 570 mark. For now, expecting a dash towards 560, a stop loss at 538.
The BTST ideas coming in from our technical experts. Of course, the talking point today, Pashupati, has also been the IMD forecast, right? How much credence do you really give to that data point when it comes to the market move going forward?
Well, people do listen to the weather forecast simply because agriculture is definitely a large part of our economy and drives, at least in the rural areas. And plus, with elections coming in 24, this is the last monsoon that's coming. So it would be nice to have a good monsoon, and followed by, obviously the current government would like to be re-voted in. And so they should not have a food crisis in the midst of it all. So, I personally don't really understand it, and just say, okay, the monsoon's going to be okay. And, whatever I've heard says it's going to be fine in the beginning, and then there's going to be some issues probably towards the end of the monsoon. But with climate change going on these days, who the hell knows what's happening with all this? And it's actually quite scary.
You were saying something?
No, I'm looking at the SkyMet and the predictions. Aisha, you normally tend to believe that the predictions are the most accurate ones, but this is whether it is SkyMet or IMD. IMD has got accuracy number which is far better than what SkyMet in this case is. But 90% plus after 5 years of good monsoon, even if it is marginally here and there, where a month ago, 6 weeks ago, we all were talking about a nasty summer, a very warm March, a terrible April, temperatures like never before. The summer is not done yet. Temperatures will rise, but it's not as bad as what it was appearing in the month of Feb, when the temperature across India were nearing 35 to 40 degrees. That time it appeared that the El Nino impact is going to be rather a magnified one, and we could be in for a very nasty season. That fear has got diluted. And for me, that I think is a big hurrah from a market standpoint. Look at all the concerns. Adani fiasco addressed. Sell-off in US regional banks addressed. Monsoon so far, touchwood, looking at the latest prediction, addressed. Lot of concerns one by one are getting addressed. Now what you have to understand is the trigger. The concerns are getting addressed, but when will we find the new trigger? Will it be earnings? Will it be decline in crude? Will it be pure reversal in flows? We don't know. But the concerns are getting addressed, and that's how market bottoms are made. The rise may happen when the triggers, they start kicking in. Kunal, am I making sense?
Absolutely.
So what's next then?
Nothing much to add. I mean, beyond the point which you said.
Come on. You can always look back and talk about trends and.
No, I think that's how decisively and precisely trends shape up, because at the peak of at the peak of the market bottoms, the pessimism is at the highest. But and as the market gets into a gradual recovery, there is not an immediate reversal of sentiments. Sentiments take a lot of time. They need proof in terms of data points. They need proof in terms of numbers, etc. Whether that gets turned around, and then the sentiment starts to improve slowly. So I think we are still not into that phase where the sentiments have started to improve for the markets, which means that possibly the upside is also much more high for the index.
Okay, so the upside is there for the index, but for now we are closing just around that 17,700 mark. Not a bad day at all for the bulls. A 0.5% gain coming in on the Nifty. The market breadth was also quite decent. 1,300 stocks advancing to around 700 stocks declining. It was the Bank Nifty that was doing the heavy lifting clearly today. So move of around 550 points, led by Kotak Mahindra Bank, which was up around 5%. And then a lot of PSU banking names actually did quite well. So it was the top sectoral gainer today. Bank of Baroda on account of the Q4 update. Punjab Sind Bank, a solid rally of 5%. Union Bank, UCO Bank were some of the other gainers as well. Towards the end of the session, you saw the metal names perking up. So JSW Steel, a 4% gain. Jindal Steel was up a good 2.5%, and similar rally coming in for Tata Steel as well. Can't say the same about the IT counters. Very, very weak. In fact, IT was the sole sector that is going home with a cut of over 1% today. So names like TCS, Infosys, HCL Tech, and even from the broader markets like Persistent, L&T Tech, they were all down anywhere between 1 to 2%. So TCS going weak into its earnings, expected post-market tomorrow. In terms of the other gainers from the broader markets, Trident deserves a mention, 8% gain. Hindustan Foods was up 7%. Then KPR Mills, Data Patterns, Torrent Power, some of the other names that were doing quite well. From the IT space in the mid-cap world, Mastech, Tata Elxsi as well as KPIT Tech is something that we are watching out for. On the losing side, Berger Paints surprisingly was down 4% today. ABB India was of course reacting to that report coming in from Kotak Securities, which downgraded it, so a 4% cut there. But then you also had some real estate names which were reversing the gains that we had seen yesterday. So Macrotech Developers was down 3%, and Delta Corp 2 was a bit weak ahead of its earnings. So earnings expected post-market today. Ahead of that, a 3% cut coming in for Delta Corp as well.
Oh yeah, and that's that. We're done for the day. 101 points higher for the Nifty futures. Not bad at all. We'll wind it up then right here on this edition of Closing Trade.